Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Tuesday. Let's just go straight to the charts, man. Yesterday, treasuries just got so crushed. Where are we at? There it is. Yep. And look, in the overnight move, we even further. So we are now at 472. Jeez. Good grief. There's just so many big down days as of late. And like in a row too. Like, oof. Now, equity markets not taking it too well and are now down in the overnight. Oil coming back quite a bit yesterday and back below 90. Or no, I remember saying I think we'll be around 90 for a while. Gold and silver just, oh my gosh. Copper, not so good. Bitcoin giving up a good portion of the gains that it had. And the dollar pushing new highs, almost to 107 now. Whew. That is quite a jump. That is quite a jump for the dollar. Okay, so that's basically the picture, is rates just keep going higher. Now, we are getting some interesting flow here in the first 5 minutes. You see here, pretty big icebergs on the offer, but big trade on both sides here. Let's see here. We don't have any news at the bottom of the hour. We do have Jolts job openings at 10 o'clock Eastern time. We have 52-week bill auctions. And by the way, remember that they started new futures for those. Fed's Bostic was speaking. ECB's Vilroy speaks in about 15 minutes. So, overall on the flow side, and I'm not getting very much data on where the treasuries are heading, but on the equities side, things kind of look set up for a buy, but it's not happening yet. So that is curious, but we usually do get, you know, year-end buying. I'm not sure if it's going to happen this week, next week, like some people are saying. But we'll see. We'll see. So that's basically where we're at, and so I don't know. I'm kind of leaning towards going long here. The flows are definitely to the long side, but you know, it's been so much of a sell all week that I'm a little bit weary about taking that one. I would say yesterday, you know, I think that I missed a few things because one, the PMIs apparently when you actually dig into the report, not the headline numbers, but apparently as you dig into the report, you get more of a stagflationary signs. And then the other thing is that there was Fed's Messer was speaking and she was kind of hawkish. I mean, she didn't say anything new, but apparently the market didn't like that. And so they started selling off then. Oh yes, another thing that's going on this morning is the Matt Gaetz has moved to remove the Speaker of the House or vacate the chair, as they say. So we'll see how that goes. I don't think it's going to go very well for him, but I don't think he would do it if he didn't think he had the votes. So we'll see what happens over there. So in the meantime, let's keep an eye on this. There is a decent amount trading here at each of these spots. So, you know, that I think does give us some signs that there's going to be a buy here. Okay. That moved awfully fast. So let's take a quick break here first and insert an ad, shall we? Curious. Just kind of looking around here. Joseph Wang, what I learned during being at the Fed during the repo spike was that even very deep markets can run out of money. I wrote in January 2022 that this could happen in the long end. A QE time bomb. More recently, I wrote that I think it is happening now, says Joseph Wang. That's odd. The treasuries have come back there, and I'm not being given 472 again. Curious. Yeah. Okay. Bitfinex has an interesting comment here. Thing is, he's not wrong. In the crypto industry, you can have mountains of evidence against a fraud and nothing will happen against it. It takes one of the cult leaders to throw it under the bus to actually take it down. If CoinDesk released the article against FTX showing that it's insolvent and CZ said, don't believe the FUD, FTX would be in operation today. Insolvent. Case in point, when Bitfinex lost 40% of Tether reserves in 2018 and it was exposed in 2019 by the New York Attorney General, cult members circled the wagons against Tether fraud and it didn't implode. The same could have happened to FTX. They just decided to let him die. Bad news against crypto exchanges does absolutely nothing to the exchanges on its own. You could have CZ himself admitting to knowingly laundering money for terrorist organizations and stealing customer funds through Merit Peak and SignaChain, and nothing would happen unless another cult leader throws shade. Yeah, and who's left to even throw shade? Okay, now it's kind of touching 472. New study shows that the higher a country's vaccination rate, the higher its excess deaths. And the same Taleb says, can we see the study? Okay. I agree. Who are these guys? I don't think I'd get filled at 472, but the 30 year is so, man. I kind of want to see what this study is too. I like how mini squeeze retraced back from 4 p.m. Trevor's going to be volatile. You don't know. I mean, we have some signs that like the volatility is going to get crushed and we turn into a year-end rally is kind of what some of the option flows seem to be suggesting. But, I was reading all of that on my morning run through this morning, like Nomura had been talking about that, and then I come and I see interest rates above 4.72, S&P 500 another overnight sell-off, and it makes it hard for me to see that scenario right now. At the very least, it's not relevant to the flow at this exact moment. Oh my gosh, I had my, yeah. I'm like, how long have I been muted for? No, it was just that few little bit because I did it to blow my nose, huh? Bostic is speaking. I think he started speaking at the top of the hour, so it must be that he ran through his speech and now he's like answering questions. You guys picked up on that fast. I'm surprised how many of you guys are actually watching like the actual view and can see that I'm saying something and you're not hearing anything. I don't know if there's actually a reaction to it here. It seemed like, well, I was seeing the S&P 500 selling and I was thinking, what's with that? But then, like, look at the way that the treasuries have moved. The choice of multiple monitors. Oh, the McCarthy thing's going to be interesting. Sounds like Gates is going to run, but I just don't see how he wins. Man, they got back up there so fast. Why do you see ads in the middle of the live stream? Because YouTube wants to make money, of course. I'd expect to see it more and more. Let me well, maybe you can't really see it. So, like, I have a theory that YouTube directs more people to the stream when we show ads, but could be wrong. But I have to insert them manually, so I choose to put them in a time when there's nothing going on and I can take a quick break. Premium YouTube is worth it. There you go. Who was it that was, I think it was Disney Plus. They were talking about putting ads in there. I'm like, if you put ads in Disney Plus, I am getting rid of it. Like, here's the thing. I hate ads, but you know who really hates ads? My toddlers. Oh my gosh, it's so annoying. I put on Miss Rachel for Ethan, you know, and then he's watching the live stream and like every 5 minutes an ad comes on, and every time that an ad comes on, he's like, he thinks that he did something and he gives me the phone to try and fix it. Right? Ugh. The other one that's really annoying is when you put something on Netflix and then after 2 episodes it says, are you sure you want to keep watching this? I've just only got like 10 minutes. Come on. Yeah. But, I mean, that YouTube has to make money somehow. Right? The more money that goes into it, the better content that you're going to get. Generally, right? If anything, I think that small creators could use to make more. It doesn't bother me so much because I have a day job, but there's, you know, I think there's got to be hundreds of people that are in the same size of YouTube channel as me and have interesting niche content that, you know, they could really make good stuff if they were bringing in enough revenue. But it seems like you just, you know, until you get into the hundreds of thousands, it's not really viable living. The E-Mini is not happy. You pay YouTube every month? I kind of thought that not very many people do it, but apparently some of you guys do. Okay, so the treasury's pulled back again there. We're actually getting 4725 in some points. there still seems to be maybe they're slightly leaning to the long side. I'm kind of tempted to go and to take it, but I'm not actually seeing flow here. Yeah, late to the party. Well, so on the open, we did have a little bit of buying in the treasuries, and now it's kind of been ranging here in the top end of this range. We have Bostic is speaking, and that seems to be creating some flows, although it's a little confusing. In the S&P 500, despite a lot of things being tilted towards sparking an end-of-year rally soon, the S&P 500 continues to sell off. And more recently, we've been getting a bit of, I mean, you can see it. Past what? 15 minutes selling? Time to move to Europe. Well, and so a lot of the, when you're looking at an overnight chart, and if you put a line in there on the London Open, you'll notice that, usually moves around that time. So some of the best and easiest moves that you can get is trading the London session. So one of my mentor, who is now gone, but before he passed, he had moved over to scalping the London session. So he lived on the East Coast, and so he was able to, waking up early for him was London session start. There they go, although the 30-year is not following as much this time, so oops. What the heck happened there? Reset things, because we just flattened there a little bit. Is it a flattener? No, it's not a flattener, it's a steepener. Yeah, it's a steepener, it's just the 5-year leading the way. Gotcha. That means that taking the short here in the yields might not be as good for us. Oh, no, that's interesting. This is a 20 lot hit in there at 4719. I do kind of wonder, though, if we're not getting some like risk off flows today. Well, we should know that at the moment we're just kind of kissing yesterday's lows, and yes, so that may actually be an okay place to buy it. Yeah, yesterday was first of the month, that's true. And Monday. But everything I keep reading on Zero Hedge about anticipated flows kind of suggests equities is along here. So, beats me what's going on here. I think that the market is reacting to Bostic, but kind of what I see is a lot of shuffling around and not a very clear bias in the actual market orders. So probably a good reason for me to kind of stay out of it. Why are you guys talking about all of these kind of TA levels? You forgot which stream you're on? Or you're all watching a bunch of different streams and you forgot which one you're on today, huh? I guess previous day's low is a fairly significant level. If I was really, really anxious to buy before the market opens, I suppose this would be a good place to do it in ES. But there is the Jolts job openings today. And remember last time, right? Remember last Jolts job opening was like a huge jolt. Like, that was the one where it came down a lot more than expected, right? The treasuries are just in there like, look, Seth, you could sell 472. Why not? Hey, maybe we'll even give you 4725 if we're feeling generous. Right back up there. You know, it's actually moving like a basis point up and down, and quite rapidly too, I might add. It seems like the has DV01 increased or something, because it's like it's only like 2 ticks up and down, and it's 10 ticks down here in the micros. What's with that? Did they reach new high? They did by a tick. Maybe I should have gone for it. They're like, we're tired of waiting for you, Seth. We're gonna go. That time the 30-year did pop up though. That's kind of the difference. So that time the 30-year did pop up. You can see the S&P kind of stabilizing a little bit and now pushing below again. Let's see if there's more. You guys are chat is definitely all eyes on the S&P 500 today, huh? Good morning, David. Welcome. gonna be now that I know that there's a new person in chat, I'm gonna be on my best behavior. We're not gonna talk about the insanity in Congress right now. Should I call it insanity? It's not insanity. It's just kind of interesting things happening in Congress. I don't know if they're too. Used to be that everything going on in Congress was so incredibly relevant to what we're doing in trading, and right now, not so much. Maybe Donald Trump becomes president again, and then we're right back there. But the overnight move in the Treasury seems to be correlated with Japanese bonds. Japan seems to have been the mover lately. Aha. Okay. Thank you, All on Risk. I think you're absolutely right. So overnight, here was the headline that I read this morning from the overnight in Japan. Is they said that they'll continue to do FX intervention, but that they are not targeting specific levels. So the whole thing has been 150. It's like if it gets to 150, the Japanese are going to defend it, etc., etc. But they said instead that they are targeting volatility. So I kind of think back on it, and almost every major data release that we've seen as of late has had a ton of volatility in the dollar, where it just like rotates back and forth, and the way that it moves kind of like doesn't make much sense based on what actually came out. So I'm starting to wonder, is the reason why we're having that kind of behavior around those news events because of Japanese yen intervention, which would be anything that they see that's like hawkish, then the Japanese hit back on it? Interesting theory at the very least, right? Okay, LGX2, you did the no BS. Oh, you watched the whole course. Was that recently, huh? Oh, yeah, because he was doing the later end of September. Well, I hope you enjoyed that. I've never done the webinar thing or whatever, but insanity is appropriate. It's a circus. It really is. Like, okay, I said I was going to be on my best behavior, but I'm not. Like, the thing is I'm a conservative, but I don't feel that my team is doing a very good job. That's my issue. Like I've kind of been getting into a lot, but to me, conservatism is understanding that radical change to systems usually doesn't work out. There are times when radical change is appropriate, but usually when we're talking about policy on a country scale, it's usually not appropriate. And what we really need to do is we need to understand systems and make incremental tweaks to those systems. And if that's the case, and we are to be the stewards of the existing society and we're to make incremental change forward, then our responsibility is to understand those systems as well as possible. And when I go and I look over at the Republicans, I can continually see people that just seem to have no clue how things are working at all. They're not on your team, they're on their own team. Well, I really think that it just comes down to what is actually driving them. I think that what is driving them is some sort of socio-cultural dynamics that have led to certain opinions that have become like entrenched ideological positions that they go for no matter what. No, I just went through the online course. I studied. Oh, okay. So you took the basic course, which I love. That book, man, the basic course, the no BS day trading basic course. He doesn't pay me. He should pay me. I should have an affiliate program with him. Dude, the basic course, I just think is so good. You know, I don't explicitly come in and trade those setups per se. You know, here comes one of the things that he says is like, you'll see it, but like, it can go this way or it can go this way. Which one do you do? You'll know in the moment. You'll know. Well, it does kind of work out like that, but the reason it works out like that is because if you have an idea of what the flows are going to be, you can kind of game out how they will try and execute it and what games you're seeing might actually be, right? So, but it's just I think the thing that is so great about the No BS course is it forces you to think about there are other people trading in the markets and they do have an impact on the market. And so really what we're trying to do is trying to predict what those people will do and how they will do it. And when you watch it in the DOM, you can see how they're doing it. And that gives you, a lot of insight into what's really going on. So like right now, I can definitely see we seem to be tilted to the upside a little bit, but like I'm not seeing a ton of market buying. It's just kind of going through in this range. It looks like they're ready to move up though. I mean, they are pushing highs at the moment. S&P continues to sell. Think they're all captured as a uniparty? Well, okay, so this is a perfect example, I think, of where we need to understand systems, right? So the reason there is a uniparty, it's not like some conspiracy theory, like both sides decide that they're going to agree on a certain thing and yada, yada, yada. It's because all of the incentives for being a congressman push you in a certain direction. And so they all have a tendency to go in that direction. And that direction is basically spend more money and always support whatever war is going on. Okie dokie. So it looks like I missed my opportunity. But it's not, even though it did move up here, only this most recent move that I've seen the cumulative delta really change. So it doesn't look like it's a move that I really could have felt comfortable jumping on. But it does seem like there is maybe an imbalance to the long side slightly. But we're only getting a hint of it at the moment. Self-preservation and personal greed, yeah. I think self-preservation is a big part of it. That they do what is necessary to stay in office. This is why I come down kind of on the side of things different to what a lot of people do. Like term limits, and they've done kind of studies on term limits, but like what happens when it's in the state legislature. And the research on it is basically like it doesn't do any of the things that people hope it will. That it tends to have the opposite effect because you just end up with legislators being very inexperienced and learning how to write laws and work together to pass legislation is a skill that takes many, many years to learn, apparently. But then the other one, what was I getting at? Oh yeah, the other one is the money thing, right? I think that what you've got to do is that people always complain about how much Congress gets paid. I don't think that Congress gets paid enough. I think that they should be like what is the top level? So if I max out my contribution to my 401k and I max out my contribution to my IRA, and I have kids and I max out my contributions to 529 accounts, and maybe I have a health saving, I'm doing all of that stuff, right? It's not until you get to like $250,000 a year that you're like maxing that out and you would actually be able to like put money away in the markets to play with or whatever the deal is. If you said I'm not going to have any mad money unless I'm completely maxing out the tax advantaged accounts, right? So 250,000 basically ends up being like that gateway, in my opinion, between like the upper class, essentially. I think that Congress, so they're paid like 250 right now. I think that they should be like whatever that level is times 2. Whatever that level is times 2. And now they have so much revenue coming in that they can do whatever it is that they've got to do, take care of their family, etc., etc. Because once you're past that level, like honestly, in all seriousness, there is no need for a congressman to have more than $500,000 a year. Why do I say that? Well, because once you're getting past that amount, why? So what is it that changes in your life? What is it that changes in your wealth that justifies making more than that? Well, the reason that you make more than that is because it gives you power and the ability to influence things, right? Because now you're talking about you have stock options, you have equity in companies, you maybe you're on the board of a company and you can influence the direction of a company, right? Nobody in Congress should be doing any of that, right? So I say you pay them the maximum amount that is reasonable for a person to have, right? And then force them to have all of their investments in indexed funds, right? And then you make it so that all of their incentives should be to be the best legislator possible. And you should pay them for life. You should pay them for life, and you should ban them from entering the lobbying industry. I don't think that senators should be allowed to become lobbyists after they get out. That side, it's so bad over there that, some congressmen just leave Congress early because they'll make more money and their life will be more convenient being a lobbyist than a legislator. Like, that's what Jason Chaffetz did here in Utah. Okay, so there's a level break setup right there at 07.5. It's a 50-50 here, but I'm kind of suspecting, given that run-up and everything, that might be a brief pullback here. The scene of the crime was kind of like 04.5, 05. I don't know if they'll pull back that far, though. I'm conservative and they're terrible. So here was a thought that I was having this morning, since we're talking politics. In China, and I mean like ancient China, okay? In order to be in the government, you basically like had to study your whole life to do it. Like you had to study Taoism or whatever it is, and there's like these texts and stuff that you had to study, and it was like apparently crazy hard, and there was this exam, and most people did not pass the exam in order for you to get involved in the government. Now, there was some problems with that system. Number one, the only people that could afford to do that sort of a thing were people that already had a lot of family wealth, essentially, right? People that were already rich bureaucrats. So that's kind of a problem. The curriculum was also very ideologically based. So basically, it forced everything to be on one ideology, and that eventually ended up being a problem. When communism came around, it was able to topple that very easily because, the ideology was so entrenched, but it was outdated at that point, right? So there was a real problem with it, right? But there was a real benefit to it too, which was that if you were in government, you had to know what you were doing. And I kind of feel like a system like that would maybe benefit us right now. Because I keep seeing all of these people in Congress. They're like, oh, there's a housing shortage. What are we going to do? I know. Let's give people more money to buy houses with. Ugh. How are these politicians so stupid? It's just like they don't understand even basic economics. How did they get elected into office with these kinds of dumb, understanding of the economy? Right? There should be some like minimum level of education required before you can even run for office. And the question is just, how do you provide that without it becoming only rich people can do it? So here's my solution. if you get in. That is, there's like an entrance exam. Okay, so like, you go through school and everything, you go into high school, and then there's this one academy that is like the government academy. That's basically, or the government college, where basically it's a college run by the federal government with the intention of creating legislators. And in order to become a legislator, you have to have graduated from that school. Okay. In order to get into that school, you have to pass a test. But if you pass the test, you get a full ride scholarship. So everybody can take it. Everybody can take the test. And if you get in, then you're fully funded. That way it can be across the board, right? And it will have to be based on performance. It have to be based on how well you do on this test, right? That solves one problem, which is now everybody can get into it. So then the only thing that you have to do is you have to say, okay, how do we set up a system to ensure that the test does not become an ideological limit test that only allows a certain type of political opinion to get in, right? That's my thinking. That's my thinking. Because I feel like especially on the Republican side that we've got a lot of people that don't completely understand the systems that they're dealing with here. Okay, so we did pull back about 3 ticks. And the S&P did bounce there. It was about 5 points. I don't know if we can get too excited about that. At the moment, it really looks like come down to previous lows, test it, bounce. The problem is that the S&P 500 opens in 20 minutes. So, like, if the S&P 500 opens close to the previous day's lows, what do you think that the chances are that they test it and break down to the downside at least a little bit, at least initially, right? Like, probably the setup that I can see happening is it opens at 4,300. They push below. There's stops. Everybody panics, and then maybe we see what happens, right? Ooh, look at that. Almost all the way back. The 30-year has not completely come back. A report from Fitch saying that commodities should stay range-bound. Treasuries did come back there all the way back across that new area that they had formed. So now the yield is not coming back as much because we were at like 4,715 when it happened. Oh, so yeah, so I was going to show you guys this picture. Look at this picture. This is this guy. He's got like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 monitors. Like, what? WTF? That is like insane. That is like insane. And what is he doing with all of that? It looks like he's streaming with it, actually. Doesn't look like he's trading. There's nothing up there about trading. It's interesting that he has, what is this tool called? I forget what it's called, but he's got a to-do kind of a project management sort of app on the big screen in the background. He must glow at night. Dude, that just makes me think about something that I've been thinking about a lot is how much we're exposed to. Like, your phone is constantly putting off radiation. There's just radiation all over the place. What kind of effect is that having on us? There's all sorts of chemicals in the environment that people didn't used to have anymore. I was watching this TikTok and this guy was saying, well, the reason that you're getting like more gay people and genderqueer and transgender people is because of environmental toxins. And so really what's happening in society is that everybody's gaslighting each other about how the environment, you know, it's all of these other things and it's not the environment, essentially, is what he said. It's just a theory. I'm not endorsing the theory, but I do find it interesting, right? Because I have a lot of, well, I have like terrible allergies. I have a bowel problem. Like I have autoimmune disorders, essentially. And like what causes that sort of thing. I saw this thing on the All In podcast. I don't watch the whole podcast, but they always show me the best segments on TikTok, so why not? And they were saying that they did this thing where like they would take the thing that the body is attacking and lipolyze it, I guess you would say, and then put it in the liver. And the liver would take it and say, oh, this is totally okay. We don't actually need to have things for that. And then there's like these T regulation cells, and the Treg cells come in and say, oh, this protein is okay. Don't do anything. And then the immune system stops attacking it. So they have a possible pathway solution now for solving autoimmune diseases and allergies. Oh, if you know, that could help me so much. That could help me so much. When you're the mod for your favorite titty streamers chat. That's why he has so many monitors, huh? Average EVE Online player. I should get into EVE Online, huh? Okay, so now it looks like they're coming, really, truly coming like all the way back. So there was a little bit of flow in it in the 5-year, but again, I guess if you go from the very low, it was maybe 10,000 contracts, maybe 15,000. So I suppose that we could read this as a pullback and it would push higher, but there's not enough volume in that for me to really be confident about another leg. No trading again. Spending the day battling the red tape. Oh, that's not good. At my new job, it seems like they want to introduce more red tape around things, but it's okay because they just don't realize how awesome I am and how meticulous at the testing I am. But then I'm coming in to try and test, try and get these things to be like testable. Absolute nightmare. They did not. Let's just say that when they built these systems, they did not do test first programming, right? Okay, let's come back to Zero Hedge to see if there's any news stories here. And remember that at the top of the hour, we get that Jolts number. So the Jolts number is also a part of a reason why I'm a little bit skeptical about like a strong trend forming before then. Yeah, you still have a day job. Well, yeah, but the thing is because I live in the mountain time zone, right? I'll start my job. Well, first of all, I work remotely. Then I'll start my job. I'll do the same 9 to 5 that everybody else does, if not 9 to 6. But, you know, I'm waking up an hour earlier than everybody else. So that gives me enough time to sit here and trade 2.5 hours or whatever it is, 2 or 3 hours. And, you know, especially if we're doing the treasuries, like that's the most important time of the day. Most of the stuff happens during this short little time period. And then the rest of the day, I focus completely on my day job. I point that out a lot for 2 reasons. One is, you know, it kind of gives you an idea of the kind of person that this is appropriate for, right? I think that your tech bro is like, your average tech bro is probably the optimal person to come in and try and do the trading, because they're the person that's going to have the excess capital to do it and is going to be interested in doing it, right? So kind of you techie people, okay? But then the other side of it is because a lot of people have this idea that the goal is to come in and to trade full time. And to trade full time in futures is and make all of your money up from the futures trading is exceptionally difficult, because futures markets are so thick, and the battle for liquidity and like Q position is so tight that the sorts of things that you would do in the 80s that kind of gave us all these ideas that I could day trade for a living, or even in the 2000s, because there was a kind of a renaissance in the 2000s when a lot of people made money, right? Those opportunities really aren't available for us as retail traders. Like, we have to trade differently today to make money than people did 20 years ago. Just straight up, we do, right? And to some extent, at least the way that I do it, I'm trying to be a sniper. So I don't even take a trade every day. I didn't take a trade yesterday, right? I'm waiting for the right moment where I really know that I have an advantage. Is that, you know, if you were making your living off of that, that's a little stressful, right? So the other reason I mentioned a lot is because I think people should come in with the idea of having a stable day job and doing this as a side hustle or as a hobby. Because if you're really go through it with like the intention of this is going to replace my income right away, that can actually kind of cause you to self-destruct and kind of hold you back. I think the 10-year might see 5%. It might. Obviously not today, but when it just based on what's changing in the yield curve, we could see 5%. So where's Akshay? Oh, yeah, we haven't seen him since the beginning of the year, but he was going to school and stuff. You know, so I'm assuming that he's, you know, busy doing school and forgot about us, which is great, really. And I'm sure that someday when he's like a billionaire, he'll come back and visit, right? So if you have like 5K for trading, then options is the way to go. Well, okay, so the problem if you were going to do 5K with options is I don't know how many hits you actually get. It's kind of the bum deal. Like really, the more money you have, the better of a chance you actually have of making it, right? Because there can definitely be some opportunities and options, but you know, there's a couple of different ways to do it. So one way to do it is to be the seller, to sell the options to other people and then hedge yourself. But in order to do that, you have to have a pretty big wad, essentially, right? Like you probably have to have hundreds of thousands, millions of dollars. Otherwise, you know, when when the crazy move happens, and it would, you probably wouldn't last more than a few months before the volatility comes, and then, yeah, you should be able to hold it to expiration and everything, but like your margin will run out before then, and you get forced out of the position, right? So that one doesn't really make sense. So then you say, okay, so I can take the other side. I know something, and I'll buy the options when I know something, right? Okay, that can be a great way of trading, especially if you really actually know something. But now you're playing a game of, okay, if I win, I double or triple my money, and if I lose everything, right? So let's just say that you had a $5,000 account, and most of the time I've found that when you're taking a trade like that, it's like $500, right? So you can only do that like 10 times, right? So there's challenges all around. If you have a small account and you want to trade, then futures is really the best way to do it, because you can come in and you can be consistent with futures, okay? It's not going to replace your whole income. The wheel strategy is the same sort of problem, which is that in order to really do it and avoid the fat tail, you have to have a huge wad. Because the wheel is essentially is just a more sophisticated form of being a seller, being an option seller. Covered calls, you can totally do, but that's not going to replace your income, right? Selling covered calls. So if you do get called in and the crazy thing happens, you just have to sell your stock. Okay. Watching this down move, there was a reasonable amount of volume behind it from the perspective of the 30-year. The actual liquidity still isn't telling us a whole lot. So I'm kind of thinking that we'll kind of chill around here until the Jolts number. Well, would it be better? Okay, so if you were going to do something like sell covered calls versus trade micro futures, right? Selling covered calls would probably be a more consistent moneymaker, right? But it's also a much more passive strategy, right? Because you're talking about selling something and then sitting for possibly weeks for the, to make the money off of the time decay. So, if you want to be, that's the other thing, is futures are really for people that want to be active in the markets, right? And the advantage to being active in the market is you get a much better view and picture of what's actually going on. You become a more informed player. So I think that one of the things that you can do, and one of the things that I have done and probably don't do enough, is I'm sitting here watching the futures, understanding the macroeconomic framework really, really well. And then every once in a while, an opportunity will pop up where I say, I know exactly what's going to happen there. And then I can buy options and make a ton of money off of it, right? Like I did that with oil. When things were going crazy in oil, I just bought USO calls. Made a few $1,000s off of that. Okay, let's read this. Steeper Yield Curves and the Limits of Correlation, authored by Simon White, Bloomberg macro strategist. The U.S. yield curve should continue to steepen, with increased Treasury bill issuance likely one of the several supportive factors. In showing this, we'll get to a deeper problem in market analysis, the limitations of correlation. Finally, after one of the deepest inversions yet seen, the yield curve looks like it is on a sustainable steepening path. I expect that trend to continue, with one of the supports, as I argued in a recent post, the increase in bill issuance. That promoted a riposte from Cameron Kreis, arguing the correlation was low, and that anyways, correlation does not imply causation. Both fair points, but they offer up the opportunity to look at correlation more closely, a tool used frequently, and often misguidedly in market analysis. The chart that Cameron objected to is below. It shows the yield curve versus the T-bills outstanding as a proportion of government debt outstanding. As he pointed out, the correlation between the two series at negative 25% is quite low, although you can definitely see that they seem to turn at similar points. But it is important to take the lead into account. Two lines on a chart with no lead may explain, but they don't predict. Two series where one leads the other, assuming no spurious correlation, can predict, which has considerably more utility for investors. In the chart above, the T-bills series is pushed forward by 6 months. Recalculating the correlation using the series correctly offset shows it rises to 36%. This is still on the low side of correlation and doesn't demonstrate causality, but we can better see the relationship by looking at the yield curve versus the average duration of Treasury debt held by the public. As the chart below shows, the public average duration of debt held has done a decent job of tracking the yield curve with a 9-month lead since 2008 and the Great Financial Crisis. Yield curve steepens as public duration falls. The correlation of the annual changes is negative 51%, with a stat of about negative 5 in the linear regression. As an important side note, we should always do correlations on changes, not levels, to reduce the impact of drift collinearity. Right. So you want to convert the series to percentages, essentially. Cameron put forward another relationship between net new duration and the yield curve, showing they are positively rather than negatively related and having a still on the low side correlation of 44%. Nevertheless, I prefer the average duration held by the public as a yield curve predictor, not only due to the higher concentration, but as it gives information on net issuance across the whole curve, and it negates the Federal Reserve ownership effects, and the relationship gives a lead rather than being coincident. But there are two further important points to make. The first is causality. As Cameron reminded us, correlation does not imply causation. A negative 51% correlation is not too bad, but even 100% correlation would not imply causality. In fact, no mathematical technique can prove causality. The only way to indicate causality is to have a causal theory. One offered here is that demand for shorter-term debt and bills is elastic, and when the Treasury increases its shorter-term issuance, the extra supply creates more demand at the front of the curve relative to the back, and the curve steepens as average duration falls, as is happening today. 2 ticks up there, you curious? Yet an even bigger issue here is concerns the limitations of the correlation measure itself that are often not appreciated. In markets, we are most interested in turning points. It is here where we get the most abrupt changes, and it is here where the consensus, which typically linearly extrapolates a trend, is most wrong. It is therefore at turning points we tend to see the biggest moves in risk assets. But the standard way of calculating correlation, the Pearson coefficient, looks at an average of co-movements relative to each series' mean. Two series may line up very well at major turning points, but that can easily get diluted by the rest of the data points in the set. This is... Dude, is he going to give us a better... If he gives us a better mathematical tool here to use, I'm going to, lose my mind, because this is the issue that's always driven me nuts. Is if I look at the correlation, it doesn't really help you, but I can definitely see when this asset pivoted at the same time as this asset, etc., etc. Okay. De-emphasis of turning points can be seen most directly when we think about regressions. The ultimate aim from an investor's standpoint is to find relationships that lead. Regressions enable us to forecast values for data series, but the most common type used, the linear regression, are ill-suited for trying to predict the all-important turning points. Take a simple sine curve. A naive regression would return a straight line through the middle. Not only is this unhelpful, it is peak wrong when you need it most, i.e. at turning points. Back to today and the yield curve. As mentioned above, the average duration of treasury debt held by the public is likely one influence on the yield curve at turning points. But it is important not to make assumptions based only on one indicator. In this case, a steeper yield curve is also intimated by the rise in global excess liquidity. Here, even though we can visually see many of the turns in excess liquidity lead the turns and changes in the yield curve, the correlation is under 35%. Yet, the indicator has been more useful in anticipating the turning points that the lowish correlation would infer. Still, no relationships in finance and markets are mono-causal. There is reflexivity and there are feedback loops as we get in any complex system. The aim of markets analysis is to shine a light on partial relationships that hopefully illuminate the bigger picture. As Niels Bohr, founding father of quantum mechanics, put it in the context of science, it's wrong to think the task of physics is to find out how nature is. Physics concerns what we can say about nature. It looks like the yield curve should continue to steepen based on the above analysis. The tacit caveat is that no relationship is perfect and there are no crystal balls after all. If anyone had the holy grail to make the money limitlessly, why would they share it? Yeah. Okay, but so he got into like the problem, but he didn't really offer a solution. Basically, there needs to be something that shows you what is the degree of correlation in turning points, that this turns when this turns. So I stopped using correlation because of cross-market correlation. Yeah. What I really want is I want something that kind of highlights when two assets turn at the same time, to help us sort out, macro forces. This moved and this moved, so that's the behavior that we're seeing right now is more correlated to the yen than anything else, for instance. I'll talk to you later, Jiwi. Relational turning points or something like that. Okay, treasuries are coming back here a little bit too. Still looks like noise, and we got 20 minutes until the top of the hour. Try to build a correlation. Well, yeah. But the whole thing is that I don't think that correlation is the feature that I want. Because what I see is you have this data series and you have this data series, and they're both doing their own separate things, and then a flow comes in and they both do something together, right? But they might not, they might just come up to here and then stop. So they turned at the same time, and I can see, yeah, it was all noise until it got to this one point, and then they moved together, right? The only way that I can see that is by looking at the turning points, that this one was kind of going sideways and now all of a sudden it's trending up, and same with this one. And now I can say there's correlation. But if I were to use a correlation, a measure of correlation, like Pearson coefficient, it wouldn't show that they were correlated, even though I can see it. So how do you express that mathematically? Maybe I got some stuff here to search. Just a quick Google search is kind of returning some interesting stuff, but I think that I need to focus on what the Treasury is doing here. Kind of seems like, we had another opportunity to go short at 4715 and I didn't take it. And like that the markets want to be positioned long going into the news, I guess. It's a relatively large stack at 07, which I find curious. So it kind of does look like they may try to squeeze them here. Octavia says that twos are leading. Yeah, although the 30-year kind of popped up pretty hard there too. So we actually got a little bit of flattening on that one. E-mini, by the way, so far this morning has been a buy. I was kind of saying my scenario would be that they would test that 42.95, but we'll see. Well, geez. I was like, I don't know about 4.7, and he goes. There's definitely volume behind it now, too. In fact, too much for me to probably try and get involved. Pretty big iceberg there at 09.5, huh? Watching every day helps a lot. Yes, it does. It's like I said, your brain has to make connections and stuff, right? Like if you're 70 years old and you want to get into trading on the DOM is probably not the way for you to go, right? So you don't have the neuroplasticity. Representative D. Lamborn demanded Gates to tell them his plan for who the next speaker is. Gates said the House should have an election. Okay. Carlos Jimenez in the meeting, if this goes through, who would support Kevin? Most of the room raised their hand. There's your answer, Matt. Yeah. Seems like a really aggressive. I would say it's a little aggressive, yeah. But it's not. There's not insane volume coming through here. Now this one is kind of a little interesting though because the Japanese yen did not follow us there. We did see the dollar drop though. So it looks like there is something going on in the dollar and that may be driving us. Gold is jumping there pretty quick, pretty hard. So gold is rallying. Is DOM trading feasible for faster moving markets? I think that whatever market you're trying to trade, that it helps to have the DOM up and to read the order flow. But trying to click and scalp on those instruments like most people do is, I think, a little unrealistic. Humans probably aren't fast enough to really be good at that. They're going to keep going? Do you think they know something about the Jolts number? Before Jolts, it is a little weird, isn't it? It's a little... the timing of this new trend is a little weird, too. The thing I'm noticing, though, is that I see this flow. I think we're both saying, like, what I've just seen here suggests the presence of informed trading. That maybe somebody knows what the Jolts number is going to be, right? But the way that the liquidity is reacting to it, the liquidity doesn't seem to think that there's informed trading. Like they took like 4,000 contracts at 10. There's been big icebergs like every step of the way up here. Yeah. The idea of like coming in and trading just solely off of like DOM signals and making like a tick here and there. You need to be in a very inefficient market to pull that off. Now, fast markets can kind of help you, but I think that you would still need a little bit of an edge beyond just eyeing it somehow. It's just too fast. More broadly, you know, the most common thing that I see is people trying to scalp the DOM on NQ. And I've never seen it work out for anybody. The NQ just destroys accounts. This is all I've ever seen. Yeah, I prefer a thicker market too. Like in a thicker market, yeah, I'm not going to be able to get that, you know, front of the queue and make the quick dollar on, you know, just only the DOM, but I can be informed and I have the opportunity to actually make real decisions and stuff. You're not too comfortable trading treasuries? Well, you've got to go and trade the asset that you understand that market, right? You know, like if I worked for a mining company, maybe I would trade gold or copper. You know, they have the copper mine here in Utah. If I had worked at the copper mine, maybe I would know more about the copper market and it would make sense for me to trade copper, right? If I grew up as a farmer and I knew everything about farming corn, maybe I should be trading the corn market, right? But if you don't have any such edge, I think that the best place to develop that kind of base level knowledge that you need is the treasuries, and that's why I trade that. And then you can take that knowledge in the treasuries and it will be useful wherever you go, whatever market you decide to go to after that, if you understand the basis of the financial system. Okay, so with all of that flow, it comes back quite quickly, right? So that's like a large meta order and it's a really brief one. DOM readability. Well, I do think so. It is a lot harder to read the DOM when it's going across multiple prices so quickly and everything. But I think that some of the tools that Jigsaw provides makes it, you know, so that you can read it. No, I don't. I've never thought about that at all, ever. Good grief. Two ticks there. And it's the dollar. It's the dollar moving. The dollar's getting shorted really hard here. if this really is a flow, somebody knows something about Jolts, there's going to be some very unhappy bag holders here, right? Because the market makers are holding it. Well, I don't know. Like, you know, one of the things, I forget what we mean by one-time framing. What I see is that a lot of this is probably just a retracement of the overnight down move, right? Like, what was the overnight high? 14 above us. You know, 14 above us would be the overnight high. Otherwise, this is just like a V-shaped reversal recovery sort of a thing. Interesting that they didn't, you know, I thought maybe they would test that previous low, prior day low at 42.95 when they opened, and so far that hasn't happened at all. Yeah, but not that aggressive with such volume. But yeah, it's like, well, the way that I would put it is, the amount of volume that we're seeing on this move is about standard for a move of this type. About 10,000 contracts. 10,000 net contracts in cumulative delta. And pretty... It's a little messy. It's not a super organized flow, you know. Strong delta. But you know, we were looking at 472. So $30. 3 basis points. But it does I guess I would say, like, I guess that means that it is aggressive, because it's like, it's 10,000, but it's like, it happens so fast, right? That pullback. So it was like 08.5 back to 04, and then back to, so it went here to here, here to here to here. Wow, those are big swings. Like, the pullback was big. Oh yeah, I did hear about that, Francesco. Yeah, that there was like a huge imbalance going in with the options, and somebody came in and decided to take advantage of it and reduced things, and so you know, the things were down early Friday and they reversed pretty much the whole rest of the day. Yeah. And it's like some really big discretionary trader that that's not the first time we've seen them do it. Yeah. But I think that the way that the trade is structured is that it was just to take advantage of this kind of weird behavior in the roll and stuff that had become too extreme. Netflix plans to raise prices after actor strike ends, says the Wall Street Journal. Okay. Five minutes, man. We're going to open up at those highs, aren't we? Hmm. Let's see here. McCarthy from his role as speaker, a vote for which McCarthy says he'll get out of the way first thing today. CNBC says the vote should begin at 2 p.m. Eastern Time. Okay, well. A little disappointed because I was kind of stalking the long, wasn't I? But every time it went, I was like, nah, I don't see enough evidence for it. It already moved, yada, yada, yada. Right. Like, I should have just on the pullback taken it. What do you expect from Jolts? Question. So last reading was 8.827. The estimate is 8.815. If this is really informed trading, then we would expect it to be below 8.815, right? I'm gonna bet that it's gonna move big, though. I bet the treasuries are gonna do some wild, crazy things. Okay, liquidity's pulling. So they're definitely trading it as a major event. And remember, this is one of those ones that, like, we've kind of been skeptical about how useful the report actually is, and it wasn't necessarily a big data point, but then Jerome Powell said that he was watching it, and so the market was watching it, and then since there was some big misses, now they're definitely watching it because there was a big move last time. So you wouldn't a year ago you wouldn't have seen a pull like that for Jolts, but today we are. Whew. 9.61. Oh my gosh. Oh my gosh. Oh my gosh, guys. What is this? That. Okay. If that was somebody front-running Jolts, man, they were dead wrong. That was wild. And so, all the way back to the other side of the range instantly. I was not quick enough on the draw there, because I think I probably could have gotten somewhere around 41715. It's probably all people working through. No. Okay, so here's the thing. Read the number again. Expectation 8.815. Actual 9.61 million. Right? So that's basically 800,000 more jobs than anticipated. That is pretty bad. That's like, this economy is not slowing down at all. That is a real gut check number, man. It's been a while since we've seen the market get hammered, get it wrong like that, right? Your ninja froze, jeez. My Dom was not exactly fast. You'd see it like it just went badoosh, and then, yep, took a little bit to. I was not fast enough, and look at it, it's still going. Okay, overnight low is 30. So we should be careful here. Again, they're saying, the Japanese, they're targeting volatility. This is volatility, right? The Japanese yen is pulling back significantly. The treasury is still at its low and the yen is not. Seven K at 07. Whoa, are they just gonna tear through that? No, maybe. Like the amount of volume they may need to like rebalance here is a little wild, so. So they're telling me that the dollar yen just rose above 150, but on my chart, that's not what it's saying. Level break setup right there, 30 half. Yeah. Too fucking slow, man. Ooh, 6K at 29. We are now to new lows. Basically, we're like in no man's land now. There's not any kind of recent low levels that you can use here or anything like that at whatsoever. It's just, okay, they breached the low. They're coming back to the 30. Maybe some support there. There actually was a lot of absorption against that, so. I tried to catch the edge there, but it doesn't seem to be working. I think it was a little bit too slow. Like maybe if I had gotten 40. Hey, it looks like there's still plenty of volume to sell, though. Whew. E-Mini is getting slaughtered. Okay, well, now we're going to test those previous day lows in the E-mini, aren't we? So I have a question for you guys, because at the beginning of the stream, there were so many comments in there about all of these kinds of technical levels and all of these sorts of things. Did it matter? Did it matter? Because it seems to me like the only thing that mattered was what the Jolts number was. Maybe there was one of you guys got it right, but it seems to me like the Jolts number is the only thing that mattered. You were done before Jolts? You don't count Octavius. You weren't posting technical levels and stuff. Talking about where it might test. You think that the 10-year could see 4.8 today? Whew, that would be something, right? Well, it seems to me like it would be, awfully disappointing if they didn't at least get 4.75 of them being so close to it, right? Trade the news, picked up a few ticks. I did not trade the news very well today, man. Today is a bad example of Seth trading the news, I think, because I could have hit into the flows early and probably have gotten like 472 if I had been a little bit more aggressive, and I'd be really happy right now. But it's not going that way. They're fighting it a little bit. Like I said, the Japanese yen is kind of pushing back against us. But it looks like there's a lot of people stuck in the treasury too. So Euro trade? I'm not sure that I would necessarily call that set up the hero trade. Because all I'm saying is that the pullbacks could be ugly. You could see this could be a situation where, well, I think you're already seeing it to some extent, that the Japanese yen and the treasuries are decoupling a little bit. If the Japanese are performing intervention right now, which I think is likely. And now you know why they were saying that overnight. It was because they knew that the Jolts was a volatile event coming up, and that they had a bunch of volatile events coming up. Okay, well, I'm not gonna... to knock him out. I'm starting to hear things over the news squawk that make it sound like that it may actually be likely that McCarthy does get kicked out. Now's the time to sit on your hands. It's a pretty wild retracement. Yeah, there's basically damaged liquidity all the way up the whole range, right? 0.3 is average short position, though. I'm not sure if my yen chart is actually updating, because it should be ticking around a lot, and it's not. I look away for a second, and the treasury's coming back here, huh? Big iceberg at 0.5. That's interesting. This is tough. I would feel more comfortable with 472 because I'd been there for so long before. Nope. Punchbowl reporter tweets, I was told by 5 Republicans will probably join with Democrats to knock him out, and McCarthy said probably so. That was the headline. So what exactly that means seems a little confusing, but it sounds like they think that McCarthy is going to lose. Ninja Trader. Well, yeah, I don't think that my Japanese yen chart is updating at all. It's like the data for that one chart is just not coming in anymore, I think. I guess I can build out a little bit of volume here between evens and 01. I'm too picking slow, man. Jeez. Oh. I feel like I'm blind here because I can't, because my yen chart's not updating. What if I refresh it? Reload all historical data. It's a little more like it. That's frustrating because I had a spot and I was like, well, I guess they're going to give us some time, and then just whoop, right back down to the lows. Yeah, it's not loading me the data. They didn't actually breach the low there, though. Not yet. Oh, jeez. Oh! I hate chasing, guys. There's 475. Good grief. Now that was a stop run right there. Wowzer. 42.70. Wow. What size are they? Well, I'm seeing icebergs as big as 7,000 today, so. I kind of suspect that somebody made a big bet on Jolts and got it wrong. You know, because that was a pretty strong rally before that news came out, right? Like, if I was trying to make a bet based on the action going into the news, I almost certainly would have gone long. And I was stalking long until I saw that Jolts number. So I'm so pissed because I had spots and I was thinking about it and I never clicked and it just was a little bit too fast for me. So I have to be more aggressive if I'm going to catch this. I think that the best opportunities may already be passed. On a regular non-day to day? Well, even on a regular day, I think that you're likely to see a few 5Ks here and there like icebergs. It's constantly changing. That's kind of, I'm monitoring what those shifts are to kind of see, is there actually something going on? Like we've kind of, the whole day, it's been doing stuff that's made us think like, okay, there's something going on. But it was probably just people positioning themselves for Jolts. The micros are forcing a premium over the treasuries over here. That's really annoying me. So come back to the scene of the crime, but you're getting 7.5 instead of 7.4. By the way, yield curve didn't really actually move during that move. I guess it flattened a little bit in the 2s and 10s, and then that reverted. Seems like here comes the reversal. Or not the reversal, the pullback. Let's come and see what Zero Hedge has to say about the... Nope, nothing yet. Yeah, I don't really think that'd be necessary, though. You could run a statistical test to see what the average mean order size is and then calculate the standard deviations. Okay, so there's a couple of problems with this. So one is that it's kind of as they change that matters, and I wouldn't necessarily look at it as, it's outside of the statistical mean means it's important or something like that. Two is that when you get a big transaction like that, what I read it as is price is going to get stuck there. That kind of becomes a hole that kind of makes it, price starts to rotate around. So it doesn't really tell me, they're going to go buy or sell. It tells me like they're going to stay here. number 3 is that the distribution of order flow sizes is extremely fat-tailed. Like the vast majority, it's crazy, but like the vast majority of orders are 1 lots. Like the big players, they split all of their orders up into 1 to 5 lots randomly. So any kind of statistic that you would get out of that probably wouldn't be very useful because of the fat-tailed nature of things. Like basically anything over 1,000 is basically, you know, outside of the standard deviation. Even though those are quite common. I actually have an indicator that shows you the distribution of them. But I use I have the range histogram, and you just change it around to look at the orders. It's a very, very fat-tailed. Okay, so they've all back considerably again. And my yen is still not cooperating. I'm going to restart Ninja Trader, okay? Really frustrated with myself because I think that like I have everything right and I'm just not executing on it very well. I'm just not executing on it. What do you think about Sierra Charts? I think it's a good platform. I don't like it as much as Jigsaw, but it's a good platform. Yep, it was definitely hung. All right. Well, they tagged that 7-5 and almost immediately turned around, so... I'm not going to say it's over, but... Okay, should note that gold has recovered most of the losses as well. 4.0? Didn't somebody else say 4.8, or were you the one that said 4.8 earlier? Oh, wow. Holy okay. So, by raise of hands, who thinks that maybe there was some intervention in the Japanese yen? That's what I was missing. That's what I was like, why? Because all I could see was this down bar. I'm like, something's going on. I can tell. I can't see it. The chart's not updating. What is going on with the yen? Oh, they intervened all right. They intervened big time there, man. Wowzer. Wowzer. Well, all of this just has to make you wonder what's in store for us on Friday, doesn't it? Because if we get too much more sign that this economy is still strong, you know, these rates could just start going through and start causing real carnage. I mean, it's already been pretty bad in the markets. It's already been pretty nasty in the markets. But it could be so much worse, right? $42.36 is the 200-day moving average, by the way. It's probably your next major support level below us in the S&P 500 if we are to continue selling. Next benchmark, if you will. Because obviously we're below yesterday's low. Oh yeah. Well, you were saying 4.8, but like, you know, if this really gets bad, then you should see 5%, 6% even. Right? Like 5% is, I think that we get there just with the steepening in the curve, right? If they start going, oh, the economy is too strong, we need to start aggressively raising interest rates again. Then 6, 7, yeah. I saw this thing. It was Kyla Scan on TikTok, and I think it was on Smart Money or whatever, the CNBC show, and Rick Santelli was on there with a chart. He's saying, you know, like if you extrapolate the trend out, like the rates are much higher here, and kind of making the argument for why rates, if this was an interest rate cycle similar to the last one, that interest rates could go up to like 13%. And Kyla was like, nah, this is sensationalism. It's neither practical nor reasonable for interest rates to get to 13%. And I'm just like, yeah, like, except for that 2 years ago, everybody said that 5% was not practical or reasonable. There's no way that we could get to 5% because of the debt and all of these other reasons. And then it happened, you know? So, like, I saw a Reddit post of someone saying so strongly of the S&P to 4,400 this week because of their screenshot they took of a high put call ratio and made me cringe. Yeah. The whole thing comes down to, are you using past data points to try and predict future data points? Right? You come back and you say, well, we've been here and that would be like a crazy move and everything. It's like, that doesn't mean it can't happen. Doesn't mean it will happen either. We would have to have a real reason to believe that it will happen. If we were getting another round of inflation, though, 13% sounds like a good estimate of where you would maybe get to. Honestly. And maybe beyond that, because if Congress doesn't get its act together and you get another bout of inflation, you know, that would be ugly. That would be like, there is a doomsday scenario in there that could get like wild. Doesn't mean I think that they're going to happen. But in the short term, you know, another quarter of a basis point up is not too crazy, right? Though it does look like that at least for today, that they may chill out a little bit. Where's my rhythmic here? Oh yeah, it's $9. That sucks. Oh, I'm mad about that. It wasn't the best. Okay, so we are back to the opening price. Yeah, I'm seeing a lot of things converge at 02.5 right now. Say liquidity is a little bit thicker now too. It looks exhausted. I feel exhausted. Let's check here to see if we get a okay, yeah, they got something about that and the Japanese yen. I feel pretty proud of myself that I called that, you know, the Japanese yen would intervene today, right? I guess the play should have been like buy the yen right after the news, right? Oh man, because that was like $3 move. That was the $3 move over there. You're leveraged in the currencies. That would have been a big winner. Okay. Okay, just when the Fed thought that the White House had instructed Biden's Department of Labor to go easy on the fabricated data, and after several months of declining job openings and easing payrolls in line with an economy that is gradually slowing, if not outright falling into a recession, moments ago, the BLS absolutely shocked and stunned market strategists and economists when the Department of Labor decided to come up with the biggest fabrication in years and reported that in August, job openings exploded from 8.827 to a mind-blowing 9.61 million. The increase, a staggering 690K, was the biggest monthly increase since July of 2021, and a 5 sigma beat to expectations. The biggest beat since September 2022. According to the BLS, job openings increased in professional and business services 509,000, finance and insurance 96,000, state and local government education 76,000, non-durable goods manufacturing 59,000, and federal government employment 31,000. Again, it is the BLS's position that there was a 35% increase in professional and business service job openings, an absolutely hilarious goal seeking of data. Well, I would just keep in mind, people could be putting out job offerings and stuff and not be serious. Like, okay, yeah, we're putting a hiring freeze on, but then they put a new set of things out there. I don't think that this number actually means anything, except for that the market thinks it does because of one offhand comment from Jerome Powell this one time. Okay. Continue. The surge in the number of job openings meant that in August, the number of job openings was 3.255 million more than the number of unemployed workers, back to the highest since May and reversing the last 3 months of normalization in the labor market. Curiously, despite the surge in job openings, the recent spike in unemployed workers, recall the surge in unemployment rate, meant that the number of job openings for every unemployed worker was unchanged to 1.51. Okay. Now let's read about the yen. This morning's hotter than expected Jolts print initially sparked a hawkish response across markets, pressing the dollar higher against its flat peers. The Japanese yen slipped back above $150 on the move, the weakest since October last year, and is trading in an area where authorities stepped in with purchases to support the yen last year for the first time since 1998. As a reminder, the first intervention by Japan came last year when the yen weakened to 145.9 in September. The country spent around $65 billion in total to support the yen in 3 occasions from September to October. But then, out of nowhere, someone bought the Japanese yen, both hands and feet, and smashed USD JPY's 3 handles stronger. Did we just see the Ministry of Finance intervene? I think so. As Bloomberg reports, Masato Kanda, the top currency official at the Ministry of Finance, says he's been keeping in close contact with his U.S. counterparts, with both sides in agreement that excessive currency moves are unwelcome. Finance Minister Sunichi Suzuki warned about the currency fluctuations for 6 days in a row through Tuesday. He said on Tuesday he won't judge the possibility of FX intervention on currency levels, but through volatility, which is what I tried to highlight. Is the old gold yen trade back? We suspect this volatility is his signature now. Yeah. Well, I still want to trade it, but I think I best not. I think that I think I screwed up, guys. I feel bad. I feel out of practice. I feel like why am I not hitting fast enough? Why am I not, I just was way too cautious on that move. I think I did have some opportunities to get it like all the way back here. Like 472, and I didn't take them. So there is reason to warrant some caution, though, with currency interventions going in, right? Because you go and you get in a trade and then they swing it against you and can just totally screw you over very quickly, right? So you didn't trade it. So I missed Octavius's comment about everything comes down to CL. Only if CL goes up, though, which it's not at the moment. The rest of the job data that we get this week is going to be very interesting, right? Because I'm still of the opinion that Jolts is a trash number. I think that the unemployment claims and the non-farms numbers could be to paint a completely different picture. It's totally possible. Although I'm also kind of, from all of the other tea leaves that we're getting, I think that those numbers will still be somewhat positive. So, we continue to get this picture of the economy is doing too well. And I'm definitely starting to get concerned now about at what point does the Federal Reserve, shift? Say, you know what? This isn't okay. I suppose I may still get an opportunity to do something, but I don't know if the price that I'm getting and like the upside target and everything are really worth it for because it could be a trade that probably takes me past my trading window. Right? I would have had to have hit it. No. When it came back, I could have taken the 4725 and I should have hit that one. I was trying to play it by ear a little bit too much in that situation. You just got to act. Was an okay price. I could have handled the stop. This pullback could come back further, though. They are coming, man. I tell you what. Look at my market maker positioning model. To the tick, twice in a row. Is that just luck? I don't know how to prove it. I don't know how to prove it. It seems like it works really well, though. Okay, Discovery Trading Group, a Treasury Bills liquidity update. Boy, that was quick. Not even 2 full sessions and the race to zero has already prevailed. Z23, a half a tick wide a bit ago. When I snap this, books will get thicker and thicker in coming days for sure as well. Has the Chinese bid for treasuries stopped? No, says Brad Setster, but China has shifted towards agencies and holds more of its treasuries in offshore custodians. This should be the definitive flowchart, not a chart. Change the valuation of U.S. custodied treasuries. I won't read all of that other stuff that he's got. Brannigan Barrett says one more hike coming from the Fed in November, probably. But I'm concerned that then we get to November or December and then we're like, oh, it's still not enough. Maybe, hey, you know what? Maybe it is the case. Could be wrong, but maybe it is the case that when you start to get an inflation cycle like this, that the only way to stop it, to short circuit it, is to have a recession. Could be. Apparently lots of drama in the Sam Bankman-Fried trial. Sam Bankman-Fried's lawyers moved to block some witness testimonies from trial. Oh, there's the 7.3 now. Yeah, if I had taken the move, if I had taken the risk trade, I really hope that I would have taken it off above 475. First Squawk tweets, the White House, Biden called the allies this morning to coordinate our ongoing support for Ukraine. I don't know if the support for Ukraine is as big of a deal as it was like 2 days ago, because the Europeans have committed a lot of money to it. So even if America doesn't get its act together, I think that they'll be okay. There were 1.5 openings for every unemployed worker in August, little changed from July. All that time they came a little short. ZN. Wouldn't surprise me to see some more down action later in the day after we're gone. I'm a little bummed that, I ended up taking a bad trade. And missed opportunity there, but it was a small loss. And, all this means is that there's still going to be plenty of opportunity the next 2 weeks, right? Probably. This number probably means that it just continues to be this ongoing saga of how is this happening, right? 3 ticks down. Awfully quick. That's another one of those. Well, since you decided not to take it, Seth, we're going to go and push the lows now. We're waiting for you. See here, we got about 5 minutes left. No, 745. There's the spoos going for new lows again. So again, the next key level I see below us is 42.36. That's not too far away. It'll be very fascinating if we come to that price level and what they'll do at that price level if it happens today. Can't predict that it's going to get there or what it will do when it gets there, but that is an area that there's going to be some market interest. Oh, good grief. I'm going through now like Discord. Oh, somebody like really tried to spam us. $30? The iceberg in there at 30. Might be a nice spot to kind of rest. Well, that would be 4.75, wouldn't it? Oh, because the 30-year is kind of hanging out down there. Could have done it. I could have done 4.3735, gotten 7.5 before it ended. It would have only been a 5-minute trade. So yeah. Looks like the yen is pushing back a little bit now too, by the way. Like it's fallen back down. Dude, if they have that huge intervention and the market just completely sells it all the way back, that would be a little bit of a problem, wouldn't it? They're trying so hard to lift the E-mini here, and it's just not going yet. You see some of these icebergs and stuff? Like, there are definitely people doing the heavy lifting here. I don't see it too much. You know, I think maybe it's just that a lot of the analysts on Twitter are just leaving Twitter. This is one of those things where it's like they might go for the lows and it could happen so quickly again, right? Zoe Lofgreen in closed House Democratic meeting. I will resign before I save Kevin McCarthy, but our unity is our power. I'll do whatever Hakeem needs. That's interesting. Baba Iacino has posted a clip of Joe Biden when he was running for a much younger Joe Biden, when he was running for president against Barack Obama, I think it was. And he was saying, yeah, you know, if I was president, first thing I'd do is come in and order them to get the troops out. But it would take more than a year to do that. And then they came in office and tried to do it within a few months. When he knew a long time ago that that was a dumb thing to do. And I guess they're trying to use that as maybe Joe Biden's not all there. Because a younger Joe Biden certainly knew. The S&P 500 still having a little bit of trouble there. And the Treasury's kind of threatening it. I think I'm going to end the stream here, but I think that it's going to go a little bit lower. Hey, before I go, let's check on our video, shall we? $337 in the first day. Not bad, guys. There was a lot of comments on that video at the beginning, so I really appreciate those of you guys that left a comment on the Smart Money Concepts video. Could have been longer, you think? I wanted to get into how I programmed it, but I was concerned that that would ruin the engagement on the video, so I didn't put it in. It's still about the same length as most of my videos. It's around 10 minutes. But, you know, if the assertion is that there was more content to put in, yeah, there definitely was. Are there any more comments on it? No, it's still at 15. Still a chance that it just like takes off, but I don't think that it is actually ranking very high for that keyword, probably. Scalping with the Dominius, is that a good or a bad idea? It's really hard. We'll put it that way. It's really hard. The equity indexes are more random, so wouldn't call it a bad idea. I would, but you know, that's what most people are trying to do. And I don't see very many people having a good time with it. I myself just really struggled playing that game. So I'm struggling playing this game right now though, man. Like I know what's going on, or at least today I felt like I know what was going on, but I just couldn't, I just kept missing it. I had like 3 orders I think in there that didn't get filled, that were too slow. So maybe the edge that I was catching there in those situations is gone now. There's just too many people trading the micro treasury yield futures now. They're catching them because it was fast. The volume came through. It was, yeah. I might have to make some adjustments there. I'm not 100% sure what I can do, but I may need to make some adjustments there. Well, anyways, time for me to get going, guys. So let's change the title of the stream. Jolts, sparks, devastating sell-off. It was an ugly sell-off, folks. Okay, guys. Better luck to myself next time. I'll see you tomorrow. Stay